Going to proceed with our next presentation of the evening, the fiscal year 2018 audit presentation. Mr. Crotchfeld, would you like to please introduce our auditor and give us an idea of what we're going to be hearing tonight?
Sure. So I'll start off doing the presentation on the CAFRA and financial numbers, and then I'll turn it over to Scott Clellan from Wiss and Company, who is the district's independent auditor. So, while we're waiting.
Just want to introduce a little bit about where we are in the audit process. At this point, we usually meet in either November or December with the final audit, and we did take the time and met at length with the Finance Committee back in, I guess it was November. And at that time, we notified everyone that we were waiting for information from the state under a new standard this year, and that we would have to hold off issuing the audit report. We didn't think it would be this long. So what you have before you tonight is a draft extracts from the audit based upon information that's been completed. The audit is complete. We are just waiting for information from the state, which really deals with information pertaining to your state health benefits that are the state's liability, but they require disclosures under a new government auditing standards or accounting standards. So we finally did get the information yesterday. So we now have an extended deadline of February 13th, 2019 to get the audit done. So I just wanted to give you the heads up that normally you would have a bound report tonight. You will get it shortly once we wrap up, now that we received the information.
Okay. So it seems like every year we always have to follow some amazing student presentation. Last year it was robotics and balls were flying all over the place, and now it's singing and dancing. Scott wanted to sing and dance his presentation, but I told him no, not a good idea.
I said only the three of us would do it together. None of us can sing or dance.
So, all right, so the 2018 Comprehensive Annual Financial Report. Just want to note that once again, last year's audit, not the 2018, but the 2017, we received the Association of School Business Officials International Award for Financial Excellence and the Government Finance Officers Association Award. The first one, it's been 5 consecutive years. The Government Finance, it's been 3 consecutive years. And we will submit again once the report's finalized. So the financial statements for the district's composed of a couple different sections. The first section is the governmental funds. We have the general fund, which accounts for the day-to-day operations, salary, benefits, utilities, transportation, special ed costs, etc. We had $164 million in expenditures for the year. Special revenue, $7.3 million. Capital projects, only $118,000. And then debt service, almost $8 million. So as I said, the general fund accounts for the day-to-day operations, expenditures of $164 million. At the end of the year, we had fund balance, or reserves as we call them, of $25 million in change. The capital reserve was $9.6 million. $2.7 million for reserve for encumbrances. That's open purchase orders that have not been filled at the end of the year. $4 million in change for the legally required. That's referred to as the 2% balance that's required by the state of New Jersey. $4.3 million that was used to offset the 2018 budget, and then another $4.3 million that's offsetting the current 2019 budget. And that's been a consistent amount for the last couple of years. Also, feel free if you have any questions to, interrupt and ask. Special revenue fund, that's used to account for the proceeds from grants and other financing sources that are restricted or committed to expenditures for a specific purpose. I like to refer to this fund as the money that has strings attached. All right, so if EBF gives us money for a specific purpose, we have to spend the money on that specific purpose. All right, we just can't do what we want with it. So the major awards for 2018, IDEA, 1.8 million. That was a decrease of about 32,000 over the prior year. NCLB money, that's the Title I, Title II. We had 867,000 in awards. That was also a decrease from the prior year of about 43,000. EBF grants of 150,000. PTA and other local, 115,000, almost 116,000. And then the adult basic ed grant was $200,000. In that fund, we had total expenditures of 7.3 million. Again, EBF, 150,000 and change of expenditures. PTA and other local, 101,000. You can't say enough, and I know we recognize the EBF and the PTAs for the amount of fundraising they do and the money they turn over. It's an impressive amount, over $250,000, of things that are above and beyond the regular curriculum and whatnot was, on their behalf by them doing the fundraising. So that's always a big thank you to those guys.
Joe, would you just go back to the slide before for a minute about the decrease in IDEA funding?
Mm-hmm.
Could you just explain what IDEA is and the effect that this has, what the ramifications this has?
Sure. So IDEA is special education costs. We have to make an application. It's based off of what funds are available, what our enrollment is, and what the application states. We use IDEA in the district to offset out-of-district placements for special education. So when that award decreases, that means the general fund has to cover it. So it puts more of a burden onto the general fund and the local taxpayers.
For a very important thing.
Yes, absolutely. And it's the same thing with NCLB. We have certain regulations that we have to adhere to when it comes to the programs that we offer the students. And when those grants go down, we have no choice but to pick up, that decrease in the general fund.
Thank you.
Federal awards of almost $3 million, state awards of $256,000, and then other of 3.8. So the other, just so everybody understands, that's the expenditures related to the interlocal service agreements or the lease purchases. All right, so if we do an interlocal service agreement to purchase buses, trucks, equipment, that's where those expenditures are accounted for. Capital projects. This is the fund, I'm not going to read all that, but it's the fund that keeps track of construction, to put it in the simplest terms. We only had expenditures of $118,000. There is a caveat to that. The Fund 30 Capital Projects Fund, we only account for construction projects that are related to SDA or debt-related projects.
If I can for a second, because I just want to clarify for the board and for the community. When it comes to, $118,000 is not a large amount in comparison to the other amounts that were noted. This is the closeout of a grant, of a construction grant that we had for one of our facilities projects. The majority of the expenditures would be reflected and have been reflected in one of the prior slides, that other category where Mr. Crotchfeld referred to the $3.8 million. Most of those funds in the interlocal services agreement or the shared services agreement, while some of that went toward replacement of buses and acquisition of equipment, the majority of those funds was associated with facilities improvement projects in our schools. Aside from those monies within the general fund, several slides earlier, there were expenditures funded through the Capital Reserve Fund, which was in the millions as well. So I don't want there to be a misunderstanding that all we spent in capital was $118,000. This is strictly related to a source, one particular source of funds. But we have invested much over the last 3, 4, 5 years in terms of facilities improvements and capital improvements.
Thank you, Bernie.
So the last fund for governmental is debt service. That's where we use to account the expenditures related to principal and interest for bonded debt. So the balance as of June 30th, was $71.6 million, comprised of 3 bond issues, each one $54 million for the 2005 issue, $4.2 million for 2007, which related to the Churchill Junior High School, the 2010 issue of 12.5 that related to Memorial. Debt service, this is just for point of knowledge for everybody. There is a legal requirement that we can only go out for bonded debt of 4% of the average equalized value. That dollar amount equals $300 million. The district has the $75 million outstanding, which represents just over 25% of that debt limit, or 1.01% of the equalized value. So on the converse side, we could issue another $224 million in debt and still be within the legal limits, or about almost 75% more debt that we could issue. Enterprise funds, child nutrition. We had total operating revenues of $2.1 million. Operating revenues represent the sale of food, lunch, breakfast, a la carte, catering. Non-operating, $1 million, just over $1 million. That's the lunch program, national lunch program. So we get a subsidy from the national government and the state for breakfast and lunch. $1 million is a record for us. That's the highest it's been. So total operating expenses of just over $3 million, change in that position of $113,000. So we served 554, almost 555,000 lunches, almost 90,000 breakfast meals, and the 225,000 a la carte equivalents. So the a la carte equivalents equals, there's a formula. So it's not just every bag of chips or every catering meal we send. It's equalized to equal the value of a lunch. So I think that totals about 890,000 lunches, 870,000 lunches. So I think within the next 2 years, we'll break 900,000, which is impressive. Community programs, we had $3.3 million in revenues, comprised of early morning, $748,000, after school programs of 1.6, the Early Learning Academy of 843,000, and then other of 170,000. The other represents enrichment, any additional courses, like we do a PSAT course, a SAT course, prep courses. Bless you. And every category saw an increase in revenue over the prior year. Total expenditures of $2.8 million. So we had income of $554,000. That total amount was transferred to the general fund to offset the operating expenditures.
On this particular point, I want to underscore the fact that this enterprise fund supports the general fund budget. We allocate funds in balancing our budget and estimating what our revenue will be from the enterprise. And so we're looking at more than $500,000 of support that goes toward our overall operating budget. So this enterprise fund is highly important to the district. Without this fund, we'd have to find other sources of revenue, and it's not easy to find and create sources of revenue. I just want to underscore that for the board and the community.
The last enterprise fund is the Performing Arts Center, and it's the same concept as Mr. Giuliana just said. Any profit gets transferred over and helps offset the general fund. So we had revenues of $730,000, expenditures of $327,000, income before the transfer of $400,000. we transferred $350,000. So we didn't transfer the whole balance. As most of you know, this is a new enterprise fund that was split out from community programs. So as we're sending money over to the general fund to offset, we're also building up the retained earnings to make sure that this fund is in good fiscal standing, all right, and it's healthy. Because if we do have a lean year and we lose a little bit of money, I don't see that happening with the type of profit we had this year. We have some cushion, so it doesn't bankrupt that fund and we have to stop, all right? Because the enterprises have to be self-sufficient. They cannot be offset by general fund expenditures. I made a mistake on this. It should say fund financial facts. So we had total cash inflows of $278 million, outflows of $275 million, ending cash on hand $34.3 million. I always make a point of saying that sounds like a lot of money, but that's about 2 months of operation. So when we have, an issue where the state doesn't give us our state aid, we are self-sufficient. We don't have to go out and borrow money to keep our day-to-day operations going. A lot of school districts have to go through that process. So based off of some of the financial things we've done, we always ensure that, that's a healthy amount and adequate to sustain operations. We manage over 25 bank accounts, maintain compliance with all tax filings. We issue approximately 2,100 W-2s, 1099 forms, process 800-plus journal entries, 3,900-plus club and activity registrations, 1,600-plus athletic and band registrations, 1,100 before and after-school program registrations, and 1,000 after-school enrichment registrations. Oops, sorry. Process over 6,500 purchase orders, 18,000 invoices, 5,000 accounts payable checks, 37,000 paychecks. Special note, we don't issue paychecks. We require mandatory direct deposit, and we give everybody electronic forms, so we've cut down the paper on that. And for accounts payable, several months ago, the board approved us to enter into a contract with FIS to do electronic payments. And a component of that electronic payment is V-Card, which is like a virtual credit card payment. And as a result, we receive rebates back. So within the last 6 months, we've received almost $10,000 back in rebates. So not only have we eliminated the cost of mailing out checks, the paper stock, the stuffing the envelopes, we've also brought money in. So I'm hoping to hit the $20,000 target this year, in this fiscal year, which was the goal. And as virtual payments become more of the norm, that dollar amount should come up and increase.
And just to reemphasize, that is on vendor payments.
Yes.
Has to do with payment of accounts payable.
So over 12,000 timesheets processed, 10,000 attendance slips, bids, renewals, requests for proposals, for formal quotes, student service provider approvals. So we turn that all over for audit, and Scott will talk about that in a minute. This is my favorite slide because it's the last one, but it's also important to note. When the auditor comes in, they're just not, I went over a bunch of financial numbers. It's not just an audit on the numbers. All right? The audit has to deal with compliance with a 200-page manual that's put out by the state and grant things. It's very comprehensive. Student counts, transportation counts, it's all encompassing. So in order to have a successful audit, we need everybody, from the instructional and support staff and administrators to child nutrition community programs, JM-PAC, facilities management and transportation, student activity and athletic fund, special education, student services and curriculum, human resources and information technology, financial services, which is accounting, purchasing, accounts payable, and a lot of those folks are here tonight. So, I personally, I cannot express how proud I am to be a part of the team that has a successful audit year in and year out. I think I'm very lucky to work with these people. Also takes the support from the superintendent and the Board of Education. So without that, if we didn't have that strong leadership at the top, a lot of these components would show weakness and we would have problems. So as a result, we have a successful audit. So if you don't have any, or if you have any questions, I'll answer. If not, I'll turn it over to Scott.
So Joe, in one of your slides, you said the law limit our bond to 4% of AEV value. So what is the average equalized value? Who determines that value?
All right, so the equalized value is based off of the tax rate, and what happens is, so our township hasn't had an evaluation for years. I think they're at 25% of the real value, and that's determined by the state Board of Taxation. So there's a factor, and they make that 100%. All right, so our tax rate can be compared to the towns around us. So that's the equalized value. They take an average of the last 3 years, whatever that, the 3 years, add it, divided by 3, and that's that $300 million number that's on that slide.
So if I can interject, so the determination for the equalized valuations is done at the state level. And there are also some variations that occur at the county level, but that's not done locally. Locally, we maintain what is on the books as assessed valuation, but that assessed valuation may not represent 100% of true value. So in order to arrive at an equal footing where every municipality is on the same level at 100%, there are calculations that are done at the state level to equalize every community's valuation to essentially interpret and identify what are those values on a 100% valuation basis. And so the information comes from the state level down to the local level.
Okay, thank you.
You're welcome.
Anyone else? I'd also like to thank from the board our incredible staff. All of you really make this possible. Every time we receive an award, a commendation, whether it's national or local, it's because of all of you. And we thank you so much for all your hard work and dedication and all the due diligence which keeps us compliant. Thank you.
Thank you very much. I appreciate the opportunity to be here tonight to talk about the results of the draft audit. I did mention earlier that the audit has been delayed. However, everything you need to know and make decisions on is in the report. Nothing that the state's giving us is going to change anybody's opinion, but unfortunately we had to wait for it because it is an important disclosure from their perspective. I said this last year, and I mean it again this year, is that it's nice to come to East Brunswick to do an audit. There's some of my clients where I can't say that, where I go in and I've got a lot of concern about risk. We definitely look at a risk assessment, but knowing the controls you have in place and the strong administration and board support that you have, I sleep a little bit better when I do the audit of East Brunswick because I know what to expect. And even when we look at new areas, we're happy with the controls that are in place to prevent and detect anything from going wrong. This morning I was down in South Jersey giving a presentation to about 200 people, and it was on internal controls in school districts, and we did a little bit on cybersecurity as well. And I went over some basic controls, and some of the districts that were from smaller districts looked at me like, we don't do that, and I don't worry about that here. So you should be very extremely happy with the staff you have from an accounting perspective, Joe and Tara, the superintendent, as well as Mr. Juliana. They all take it very seriously, and it makes the audit go much smoother. We rarely have audit adjustments here. In fact, we have to fight with Tara when we do find them. So she takes her job very seriously. She provides us with an excellent package, which we don't see from any other district. We don't have any other board presentation where someone gets up from the district perspective and goes over the numbers, which is the way it should be, and we just say the results. So I give credit to Joe, who did a great job, talking about the results. It makes my job easier in a presentation because I don't have to talk about it. And again, this is the only district that has the professionalism and the people that can actually get up here and speak to you regarding the audit results and what they do as an everyday basis. So I want to commend the district for having such a strong group of individuals in place. That pretty much took care of slide one. So just going through the audit process, we are here quite a bit of time. It's not a 1 or 2 day process. We're here for several days looking at your transportation enrollment. We're looking at your school applications. We're looking at grants. We're doing control testing. So it's a good 4 or 5 week process where we're in here doing various procedures and looking at various aspects of the district. As Joe mentioned, it's just not a general financial audit. There are 9 different areas up there, 8 different areas that we look at. In addition to, we're looking at how the general and school administration runs. We're looking at instruction expenses, transportation expenses, all the enterprise operations that Joe mentioned. We look at the transactions that flow through those various different entities. We look at your debt service fund and so forth. What's our objective is we have to look at the financial information that's provided to us and be able to render an opinion in accordance with generally accepted accounting principles, which this year, even though you don't have a final report, it will be an unmodified opinion, which is a clean opinion or highest level of opinion that can be placed on an audit by an audit firm. And we also are required to report on internal controls in accordance with government auditing standards. And based upon the procedures performed this year, we did not identify any items that were deemed to be a material weakness or a significant deficiency as defined. In addition, and when we do a school district audit, if you have certain grants that reach a certain dollar threshold, which is $750,000, which you do, we also have to look at your federal programs and your state programs. This year, we looked at the child nutrition program on the federal side, and on the state side, we looked at your extraordinary aid as well as your TPAF Social Security grant. And usually they get rotated every year based upon dollar thresholds. We also have to perform the audit in accordance with generally accepted auditing standards, government auditing standards, federal grant compliance requirements, as well as state compliance requirements. The comprehensive annual financial report has 4 different sections. It's the introductory section, which is not really audited, and that really is district information only. The financial section, which we do place our opinion upon. The various stats section, and also the single audit section, which is where all your grants are housed. Overall results, it will be an unmodified opinion. Joe had already mentioned it, but I want to congratulate you again. The Certificate of Excellence from ASBO for 5 consecutive years. That'll be again presented in your audit report. And you are one of only 2 or 3 districts that actually even take a shot at applying for the GFOA Certificate of Achievement. That's a much harder award to receive, and that, again, 3 consecutive years on that.
Can I interject for a second, Scott? Because I think this is something I want to underscore with regard to those 2
Sure.
certificates of achievement and the recognition on the on our financials. The district has never been declined its application for recognition. Since the initial submission 5 years ago on the ASBO and 3 years ago on the GFOA, we were awarded on first go-round in each time. And that doesn't happen.
Not normally.
That just does not happen in the normal course. So I think it's important to note that right from the very first application, we received those acknowledgments from those organizations.
As Joe had went over the financial numbers, your fund balance is up from last year, which is great. You're in a very strong financial position. I know I was on a call earlier in the week, or last week, with the bond rating agencies. We're very, very pleased with the financial position of the district, and you continue to show a strong financial position. We are now 4 years into the pension liability. Your liability is $45 million if you were to close shop today. Hopefully, and we know that's not going to happen, but that does fluctuate from the perspective that you still pay as you go, but that is your liability if you were to have to pay it off all at once for PERS.
After you finish with that statement.
And $407 million for TPAF.
So I apologize for interjecting
No
again,
problem.
but you had just mentioned the district's strong financial position and the rating from Moody's. And we just underwent a call, had a call with Moody's last week as we're preparing to sell bonds on for the financing of the ESIP, the Energy Savings Improvement Program. Moody's today issued their letter to us, and the district's bond rating is AA2, I believe, AA2, which is the highest possible rating for a New Jersey school district. So I just wanted to note that as well.
That's wonderful. Could somebody explain to those of us who don't necessarily understand what that means?
The best way to explain it is that we received the highest possible rating for our financial condition and status, which ultimately goes toward, when we sell bonds, being able to obtain the best possible rate at sale.
All kidding aside, it's like a
our
great
credit
credit
score.
rating.
It's our credit
Credit
score.
score.
It's our
Okay.
credit score.
I just wanted to make sure everyone else understood. I, of course,
Right.
completely understood.
And what they really focused on was the tax base of the community and the consistency of your financial information, as well as strong fund balance and reserves is what they're really focused on.
And strong management.
And strong management, correct. This is really what the holdup has been. It's Governmental Accounting Auditing Standards Board number 75. 3 or 4 years ago, we dealt with the pension component. This pertains to the state health benefits of your employees that have retired and are being paid for by the state. So it was again, a national standard that came out that the state had a hard time getting an actuary to go in and actually perform and calculate the information. So your share of that obligation is $316 million. These are your retirees that you have no obligation to make payment for, but it just tracks that $316 million of the state's liability pertains to your employees that have retired from the district over a number of years. That will be disclosed in the financial statements, but it did not affect your financial position or make any other changes to the numbers in the financial report. Other results, again, we had no material weaknesses and significant deficiencies. We issued the CAFR, the large report with the numbers. We also issue a smaller 17, 18-page report, which represents your manager report. There's no material weaknesses, no compliance exceptions that were identified in that report either. The only one finding we identified this year was related to extraordinary aid. Extraordinary aid is a grant application you complete usually May or June of every fiscal year, and it basically accounts for, you get money back for special ed students that you spend more than $40,000 on or $55,000 on. And there were 2 instances where the individuals, the wrong IEP item was in there, and there are just some misclassifications of individuals that were reported in 2 of the applications. And there were no other repeat findings from the prior year, and that was the only finding this year, again, relating to the extraordinary aid 2 applications. And that concludes my overview of the audit results. And again, I'd be happy to take any questions as well.
Well, thank you so much for all of your hard work.
Thank you very
We greatly appreciate your due diligence. Thank you again to our staff, from Bernie, Joe, Tara, to everyone. This is total representation of your commitment to detail and to the integrity of this district. Thanks for the great credit score.
And I want to reiterate that. I mean, I tell you guys all the time, I occasionally walk through your office whenever you have a lot of food laying around. And you guys know how to party too, so I want to emphasize that. But you guys do terrific work. And, you know, from my position, being responsible for the school district and accountable to the Board of Education and to the community, just as all of you are, I sleep so much better at night knowing you guys, all of you collectively, are working to maintain the integrity of what we do financially every single day. And Mr. Juliana and just Mr. Crotchfeld, Tara, all you guys just do a terrific job, so thank you very much.
And I assume when all the information comes from the state, it'll be brought to the Finance Committee when the final
When the,
information that you're waiting for, there'll be a bound copy presented at the Finance Committee?
it will be actually provided to the entire board
Oh,
at that
okay.
time.
Okay.
We've already been through the process with having our exit conference.
Okay.
So the report will be made public at that point in time, and will be immediately shared with the board as well. If I can, just for a moment, I would be remiss not to also express my thanks and appreciation to the staff. Joe Crotchfeld, Tara Rosenbing, the entire staff within financial services. I just cannot say enough how much I appreciate the hard work that you put in and day out. Truly a dedicated group of folks, and I appreciate that very much. To Dr. Valesky and the board, I would be also remiss if I didn't express my appreciation to all of you, because you allow us to do what we need to do. So thank you. Thank you for allowing us to do our jobs.
Just a question. Where was the credit rating prior to the AA2?
AA2.
It was, okay. So is there any sense made in the float of bonds that are out there right now in terms of the duration and longer maturities with the interest rate movements that have happened? Are there any call features that can capture some of that opportunity with reissuance?
We haven't gotten into that level yet. We have a conference call actually for tomorrow where we're going to be discussing what that outlook what might be.
Okay, thank you.
So, but we'll be getting into that.
Thank you.
You're welcome.
Anybody else? Thank you again.